Good evening, everybody. Welcome to video 2 from chapter 16. And in this video and the next video we're going to do some actual examples of statements of cash flows. And these particular problems that I chose are from Series B in the on the problems in the homework at the back of the end of the chapter. They mimic very closely your actual problems that were assigned for labs in chapter 16. So this one is on page 890, and it is like problem P1633A. This is actually 1640B. Now, the B series that I always show you in these videos are a little bit more complicated than the A series. I purposely assign the A series when I give the two problems from each chapter. I wouldn't say that they're easier, they're really the same, but there's less length to them usually, so it doesn't take as long to do them. But I like to demonstrate these because they have like everything in them. So we're going to do this one, that's like the first lab problem, 33A, and the second one that we're going to do is going to be like the second problem, which is 35A, and it's actually going to be 1642B, but we'll get to that in just a couple of minutes. I again took the liberty of writing it all out because that's what really takes the time. And I also can do it a little more neatly when I do it ahead of our YouTube video meetings, so that you can kind of see it all laid out and I can go through it step by step. As I mentioned when we talked about the chapter in video 1, the statement of cash flows is the fourth financial statement. And really it shows how cash changed from the beginning to the end of the year. And the great thing about it, if there is a great thing about a financial statement, you actually know you're right when you get to the end of the problem, because you can just look at the cash account at the beginning of the year and at the end of the year, and that change is going to be the answer you get right here. Net increase or decrease in cash, 87,100. I know I'm jumping down to the end. But that 87,100 is actually the difference between cash 2018 and cash 2017 that you see in the problem, right? Cash went up by 87,100. So we already know the answer before we even do the problem. I just love things like that because then you know you're right? When you go through all the steps, everything's perfect. So, how did we get there? We got there by doing the 3 sections. First of all, we're doing only the indirect method, as I mentioned in the overview of the chapter in the first video. We don't even bother with the direct method. 99.9% of all businesses use this method, and the indirect method definitely been the most popular for probably a good decade now. There's nothing wrong with the direct method. It's actually been delegated to the appendix now, so that means we don't have to be responsible for it. When I learned this, I had to learn it by both methods. But this is the most popular, so that's the one we're doing. So how you start this is you always get the net income, because we're going to adjust the net income for the period to the net increase or decrease in cash. That's the whole idea. So we always start step 1, net income, and it tells us net income is, and that's at the bottom of the page under the transactional data, the last thing, 66,000. So I started with that. That's step 1. And then we're going to adjust it this is the operating section, cash flows from operating activities. This is considered the most important section, and it's also the most analytical. The other two are pretty straightforward and easy. This one you have to think about a little bit, what went up, what went down. The other two, they're really automatic. So, the adjustments, right? The first thing you're always going to do is put depreciation in as a plus. And the reason depreciation expense is put in as a plus is because it's an expense you deduct on the income statement, but it doesn't cause cash to be paid out. It's what we call a non-cash expense. So right away we add it in, no matter what, okay? If we had amortization or depletion expense, that would be the same thing, add it in, okay? So depreciation we always have, so that's a plus. And then what you have to do, notice my second item is gain on sale of building. And when we sell our long-term assets, that goes in the investing activities section, right? And we see here cash receipt from the sale of the land, $65,500. The best way, I could go into a big lengthy explanation to why you see the gain minused over here, but I'm going to keep it short. When you sell a long-term plant asset, you're going to see the money in the investing section. It's right here. And there's almost always a sale in every statement that you do. You have to find out if that sale resulted in a gain or a loss. Because if it did, you have to either add it back if it was a loss or subtract it if it was a gain, because it's already in here. If you didn't do that, your cash would not come out to $87,100. In this case, right, it would be too much because the gain is sitting in there already. That $4,500 out of the $65,500 was a gain on the sale. So remove the gain, always subtract the gain in the operating section. If you have a loss, add it back in. For the same reason, because the loss is sitting there already in that money that you got. So if you just remember, subtract gains, add in losses from any sale on plant assets as the second step in your operating section. Right? So now we're all set with that. The other things we have to do, and notice here I have 4 of them, we have to look at our current assets and our current liabilities and decide which way those changes made cash go. There's a very good shortcut to remembering this, as I mentioned in the overview video. These are current assets, accounts receivable and merchandise inventory. If you have an increase or a decrease in current assets, you're going to do the opposite thing to cash. They move in opposite directions. As current assets go up, money goes down. Makes sense, right? More money went out. Whoops. As if you have less of the current assets, money goes up. So if you have less, cash up. If you have more, cash down. That's true for current assets. So here we have decrease in accounts receivable, opposite direction, cash positive by $4,500, right? That's the differences you see here in the accounts on the bottom of page 890. Merchandise inventory, though, went up. It went from 82 to 86,000. That's an increase in inventory of 4,000. Increases in current assets mean decreases in cash. Okay? They move in opposite directions. Just have to remember that. Current assets, cash moves in the opposite direction to the change in your current asset. But current liabilities, like these last two, accounts payable and income tax payable, moves in the same direction. If your bill goes up, right, the money goes up. If the bill goes down, the money goes down. Same direction. That's all you really have to remember about that. Increase in accounts payable, right? More money is owed, or you owe more people, right? Maybe more vendors. However, you owe more money. So you didn't pay it yet. $1,900 is the difference. Increase in current liabilities, increase in cash. But we had a decrease in income taxes payable, decrease in cash. Current liabilities move in the same direction. Okay? So now we have all of our adjustments, and we are done with the operating section, except that we have to add it up and see what effect it's going to have. So we have all our pluses and minuses that we figured out. The total net increase from operating, $19,700. We're adding that to our net income. Cash provided by operating activities. You can see there's tons of writing here. Good thing you didn't have to wait for me to do that. It took a while. $85,700. It's very important to get a positive number from the operating section. If you don't, it shows financial instability. Okay? The other two can have negatives. Okay? Of course, we have one that does and one that doesn't. So let's go to the number 2 and 3 sections, the easier sections. Cash flows from investing. Well, we had the purchase of land for cash. That was a negative of $69,000. They use the word acquisition because they have to be fancy, but it just means we bought it. And then we have that sale of the land that I already talked about that had the gain in it of $4,500, which means that the book value, right, was $61,000. That's why we had a gain. We got more than the book value, $65,500. We're already done with the section. Net cash used. Use the word used if it's a negative, and you use the word provided if it's a positive. Net cash used for investing, negative $3,500. That's because we put out more than we took in. That's not a bad thing. That just means we're investing in our business. We're replacing assets for newer and better ones. That's quite common to have a negative. You don't want to be selling all your assets and not replacing them. That's not a good sign. So then we're going to go to the last section, also a pretty easy section, the cash flows from financing, and that's any way you finance your business, selling stocks, issuing notes, right? Selling bonds, paying notes, paying dividends, anything you do in the realm of financing your business. So we had quite a few. We had 4. So we had 2 receipts and 2 payments. We had a cash receipt from the issuance, that's the selling of shares of common stock, $37,000. We also had a receipt because we issued a notes payable, which means we took money, right, for a note, in the form of a note for $68,000. So we took in 2 positives there for cash, both from stock and getting the note from a bank, we're assuming. And then we had 2 payments, so those are negatives. Cash payment for the note, we paid off one note and we took out a new one, bigger one. So that was $47,100. Net cash, one more. Payment of dividends was $53,000. That's a negative. Oh, I forgot the little, oh well. Let me see if I can grab a pen. It's around somewhere. Okay. I forgot the little, there we go. Kind of messy, but you get the idea. Okay, so this is a negative. So now we're going to put our positive 37, positive 68, and the 2 negatives, 47,153,000. And 53,000. We have a positive. Net cash provided from financing activities, $4,900. Put them all together, right? The 85,700 from operating, the negative 3,500 from investing, and the positive 4,900 from financing. There's our change in cash. Just like it said in the book. The difference between 2017 and 2018 was 87,100. And to prove it out, this is how you end it. Cash balance at the beginning of the year, right? The end of last year, same as January 1st, 2018, 18,000. And the cash balance at the end of this year, this book was published in 2018, so that's why they have those older dates, 105,100. So it proves out perfectly. There was one more thing in this problem, and I'm not sure that you have a non-cash investing or financing activity in your labs, but I'm sure there's at least one in the homework. This is for things that might have happened from investing or financing that didn't cause cash to be paid out, but they will in the future. And And this is the buying of land using a long-term note. It's the fourth one down on the left-hand side at the bottom of the page. Acquisition of land by using long-term notes payable. Now, that goes in non-cash investing and financing because supposedly we're not paying on that until the next period. So it didn't affect cash in this period, but will in the future. And that note is for $123,000 that we used to purchase the land. So that's the only situation for a non-cash activity for investing, and this is an investing activity. It could also be a financing activity, right? I'm sorry, yeah, for land. So it is investing. So we have $123,000 there. Again, I don't think there's one of these in your lab problems, but I'm sure you'll see at least one in the homework. Okay, so that's it for this one. I am going to do one more in the next video that's very similar to Lab 2. See you in a few minutes.